Welcome back to Finance for Firefighters. Today we're going to talk about credit scores. Your credit score is like a reputation with lenders. It tells them how responsible and how reliable you are based on a number. If you want to buy a house, you want to buy a car, start a business, this number matters to you more than you realize. Think of your credit score like performance on calls. The more training you do, the more you self-reflect, the more you learn from the experiences you have, the better you're going to perform, the better reputation you're going to have, and the more trusted you're going to be when that bell goes off. Lenders use this number to determine how much risk you pose. So the higher the score, less risk, and the more you're trusted. The more you're trusted, the better terms you're going to get.
Are based off of FICO score. That's one everyone's very familiar with. FICO stands for Fair Isaac Corporation. The scale is from 300 at the low end all the way up to 850 at the high end. For a very poor score, you're in the 300 to 579 range. A fair score is 580 to 669. Good is 670 up to 739. Very good is 740 up to 799. And then exceptional would be 800 up to 850.
What makes up your credit score? Here's a simple breakdown.
There are 5 different components that make up your credit score. The first one is payment history. So are you paying your payments on time? And this is the entire time you've had your credit established, right? From being 16, starting a bank account with your kids, whatever, that's your payment history. Are you paying things on time? So this is like the reputation piece of it. The whole thing's a reputation piece of it, but this is like the analogy we made before with, you know, you do 99 good things and you do one bad thing. The one bad thing is going to get remembered, right? So are you paying things on time? And things that help protect you against that is by setting up automatic payments and making sure you have the cash to pay things on time with it on your credit score or your credit cards. The second one is the amounts owed. So are you maxing out your credit cards? If you have a limit of $5,000 or $10,000 on your credit card, ideally not maxing out the amounts on each card is better. If you have these amounts maxed out, it's going to reduce your credit score during that time period. Your credit score is always fluctuating. The third one is length of credit history. So how long have you been managing credit? So if you have multiple credit cards and you've had one for a really long period of time, if you, let's say you have 3 credit cards, 2 of them are 5 years that you've had, and then one of them is a 20-year card. If you cancel that 20-year card, your average score or your average length of history will go down significantly, right? So if you have a long-established card, it's in your best interest to keep it. Getting rid of the newer cards, potentially if you're trying to reduce some of your credit cards that you have, are a better idea than reducing the one that you've had for the longest period of time, even if you don't use it. The fourth one is a credit mix. So on this, it is the type of credit you have. So if you have credit for an auto loan, mortgage, credit cards, things like that, those are all different types of credit mixes that are factored into it. And the fifth one is new credit inquiries. So if you're opening new accounts or you're doing multiple credit checks during a period of time, this is also going to affect your credit score, right? So if you look at all these different credit score components, if you are applying for an auto loan or a mortgage or business loan or something like that, if you are conscious of each one of these things and you're able to have the best chances of getting the lowest loans or having the highest credit score for yourselves, doing certain things, the payment history part of it, for example, if you are regularly paying things off on paying them on time, that's great. That's good, just long-term habitual stuff. Amounts you're owed, if you're going to be going and applying for a loan, make sure that the amounts you've owed are completely paid off and they're really, really low. Rule of thumb is to stick below 30% on this to maximize the score on that part of it. Length of credit history, don't close out all the cards or old accounts that you have before applying for loans. Credit mix, same thing. If you're regularly showing that you use credit, you're going to be more reliable for them. And then new credit inquiries, don't be doing multiple credit checks on things for checking on new accounts. So if you're going to be purchasing a home, it'd be a good idea not to be opening up new credit cards right before you're doing all of that kind of stuff.
Number 1, payment history. This makes up 35% of your score. Do you pay things on time? Number 2, amounts owed, 30% of your score. Are you maxing out everything on each account? Number 3, length of credit history, 15%. How long have you been managing credit? Number 4, credit mix. This makes up 10%. Do you have a combination of auto, mortgage, personal, business loans? Number 5, new credit inquiries, 10%. Are you opening up too many accounts? Quick tip. Using less than 30% of your credit is ideal. If you can get that below 10%, that's even better. Why credit score matters to firefighters. Better credit equals lower mortgage rates. This will save you tens of thousands of dollars depending on how much you're borrowing. Lowers insurance premiums. Better shot at lower rates when you're starting a business or you're buying second properties and trying to work on a real estate side hustle. Better shot at loan approvals when starting a side business or working on investment properties. Certain departments may require a credit check before promotions or special assignments, particularly for the admin levels. How to check and monitor your credit. Sites like Credit Karma, annualcreditreport.com, Experian, TransUnion, things like that. Pull your credit once a year and check for errors. Here's a quick tip. Freeze your credit if you're not applying for new loans or you want to protect your identity. How to improve your credit score. Pay everything on time. Set up autopay. Keep balances relatively low compared to your limits. Don't close old accounts unless they charge fees. This will reduce the amount of total credit history that you have. Limit new applications unless they're absolutely necessary. A firefighter with a score of 620 took 12 months of discipline, automatic payments, balance paid down, took it from a 620 up to a 740 in just 12 months. This qualified him for a lower rate mortgage, saved about $400 a month. Call to action. Check your credit score now. Set a goal now. Try to increase it by 20 to 50 points this year. If you've never checked your credit, make it a priority this week. In conclusion, you don't need a perfect score, but you do need a healthy one. It makes a huge difference on everything. Most of us take loans between auto, home, or any kind of personal business stuff. If you're going to be borrowing money, you're going to rely on your credit score to do that. If your score is higher, it's going to save you money in the long run. In the fire service, your reputation is hugely important. Same goes with your credit score for creditors. Thanks for joining me on Finance for Firefighters. Same as always, give a thumbs up if you like it. Leave comments below. Hope you guys have a good shift. I'll see you on the next one.